Good morning and welcome to today's Crypto News Podcast. I'm joined by my co-host, and together we'll be diving into the latest developments in the world of cryptocurrency.
That's right. We've got a lot to cover today with some major market-moving stories coming out of Asia. China's central bank has made a significant move to support the yuan, and we're seeing some interesting implications for the crypto market.
Let's start with the news out of China. The People's Bank of China, or PBOC, announced on Friday that it would be halting its bond purchases. This move is aimed at supporting the yuan, which has been experiencing a slide in recent weeks.
That's right. The yuan has been losing ground, and the PBOC is trying to stall the slide in bond yields and the currency itself. This decision has some interesting implications for the crypto market, particularly given the recent comments from analysts earlier this week.
Yes, analysts were pointing to the yuan's depreciation as a bullish factor for crypto. The idea being that a weaker yuan would make cryptocurrencies like Bitcoin more attractive to investors. But now that the PBOC is stepping in to support the yuan, we're seeing a bit of a reversal in that narrative.
Exactly. And it's worth noting that Bitcoin is currently holding steady under $95,000. This suggests that the market is taking a bit of a wait-and-see approach to the PBOC's move. We'll be keeping a close eye on this story throughout the day to see how it develops.
Another interesting aspect of this story is the potential implications for the global economy. China's economy is a major driver of global growth, and any moves by the PBOC can have far-reaching consequences.
That's right. We'll be exploring this theme in more depth later in the episode, but for now, it's worth noting that the PBOC's decision to halt bond purchases is just the latest move in a broader effort to manage the yuan's value. We'll be looking at what this means for the global economy and how it might impact the crypto market in the long term.
And finally, we'll also be exploring some of the other major stories in the crypto world today. From regulatory developments to new technologies, there's a lot happening in this space. We'll be breaking it all down for you and providing our analysis on what it means for investors and enthusiasts alike.
So stay tuned, folks. We've got a packed episode ahead of us, and we're excited to dive into the latest news and trends in the world of cryptocurrency.
We were just discussing how the overall sentiment around Bitcoin has taken a hit in the past week, but what if I told you that there's more to the story?
I'm intrigued. What do you mean?
Building on what we discussed earlier about market volatility, it appears that Bitcoin's market depth shows a different picture when you look beyond the surface. At the quote level and up to 1% away from it, sellers do dominate the scene.
That aligns with the bearish sentiment we've been seeing, but I sense there's a but coming.
Exactly. When you look at greater depth levels, there's actually increased demand from buyers. It's as if there's an iceberg effect at play here. What's visible above the water might be misleading.
That's a fascinating analogy, the Bitcoin iceberg. I like it. So what does this mean for potential investors or those looking to buy?
It means that despite the initial appearance of a bearish market, there's a substantial number of buy orders waiting in the wings, so to speak. These buyers are likely waiting for the right moment to jump in, perhaps when the price dips to a certain level.
And that could potentially lead to a price surge if enough buyers jump in at the same time. We've seen that happen before, where a seemingly bearish trend reverses course due to underlying demand.
Speaking of reversals, this reminds me of the discussion we had last week about market manipulation. Some argue that these hidden buy orders could be part of a larger strategy to influence the market.
That's a valid point. We can't rule out the possibility of market manipulation. However, it's also possible that these buyers genuinely believe in Bitcoin's long-term potential and are simply waiting for a better entry point.
Exactly. Whatever the motivations may be, it's clear that there's more to the current Bitcoin market than meets the eye. And for those interested in buying or selling, it's essential to look beyond the surface level and consider the broader market dynamics at play.
Well, we'll continue to monitor the situation and provide updates as more information becomes available. In the meantime, it's essential for our listeners to do their own research and stay informed about market developments.
Building on what we discussed earlier about the recent surge in Bitcoin prices, it seems U.S.-listed Bitcoin miners are reaping some benefits. According to a report by Jefferies, U.S.-listed Bitcoin miners accounted for approximately 25% of the global network in December.
That's a pretty substantial chunk of the global network. What do you think contributed to this growth? Was it solely due to the increase in Bitcoin prices?
The report states that mining profitability increased last month. as the rally in Bitcoin outpaced the increase in the network hash rate. So it appears the price surge played a significant role in boosting the profitability of these US-listed miners.
That makes sense. When the price of Bitcoin increases faster than the hash rate, miners are able to generate more revenue without a corresponding increase in costs. It's a great environment for them to thrive in.
Exactly. And it's worth noting that Jefferies also adjusted its price target for Mara, a US-listed Bitcoin mining company, from $24 to $20. However, they maintained their hold rating on the shares.
That's interesting. The price target reduction might indicate that Jefferies expects some volatility in the near term, but maintaining the hold rating suggests they still have confidence in the company's long-term prospects.
Speaking of long-term prospects, this growth in US-listed Bitcoin miners could have implications for the global mining landscape. As the US becomes a more significant player in the industry, it will be interesting to see how other countries respond.
Absolutely. The US has been making strides in recent years to become a more attractive destination for cryptocurrency mining, with some states offering favorable regulations and access to renewable energy sources.
That's right. And as the global network continues to evolve, we may see a shift in the distribution of mining power. US listed miners are well positioned to take advantage of this trend, but it's essential to keep an eye on how other countries adapt to these changes.
Definitely. We'll continue to monitor the situation and provide updates as more information becomes available. In the meantime, it's clear that US listed Bitcoin miners are making a significant impact on the global network.
I think what's interesting, looking at today's market movement, is that Cardano's ADA took quite a hit, losing around 8%. It seems like Bitcoin's weakness is starting to trickle down to other major cryptocurrencies.
That's right. We talked earlier about how Bitcoin was struggling to find its footing, and it looks like that's having a ripple effect on the rest of the market. ADA's losses are quite significant, especially considering it was one of the top performers just a few weeks ago.
Exactly. I think this is a great example of how quickly the market can shift. We've been talking about the upcoming U.S. economic data, particularly the FOMC and NFP reports, and I think that's playing a big role in the current market sentiment.
Absolutely. Traders are waiting with bated breath to see what these reports will bring. We've seen in the past how a single piece of data can completely flip the market on its head. And with Bitcoin already looking weak, it's no wonder we're seeing other cryptocurrencies like ADA take a hit.
Now, I know some people might be thinking, but what about the Trump catalyst? We discussed earlier how some traders are expecting a potential price surge if Trump makes a favorable comment about Bitcoin. Do you think that's still on the table?
I think it's definitely possible. We've seen time and time again how a single tweet or comment from a high-profile figure can send the market into a frenzy. However, I do think it's worth noting that the market is already pricing in a lot of uncertainty. So it's hard to say exactly how much of an impact a Trump comment would have.
That's a great point. And I think that's what makes this market so fascinating. There are always so many variables at play. As we wrap up today's show, what are your final thoughts on the market outlook?
Well, I think it's clear that the next few days are going to be crucial. The FOMC and NFP reports have the potential to completely shift the market sentiment, and I think traders are wise to be cautious. That being said, I do think there's still a lot of potential for growth in the crypto market, especially if we see some favorable data come out.
I agree. And I think our listeners will be wise to keep a close eye on the market over the next few days. As always, we'll be here to guide you through the ups and downs of the crypto world. Thanks for tuning into today's show, and we'll catch you all tomorrow.
And don't forget to follow us on social media for all the latest updates and analysis. We'll be back tomorrow with another packed show, so be sure to tune in.